while the price didn't drop yet, and we even seem to be going up, and we have like higher lows at least, and the testing of $5,090 is happening over and over again, which gives us quite of the hope that the price will go higher even from now on, which is rather crazy, I would say. But anyway, while we are seeing all of that, I would like to talk about some data which we can get from the Bitcoin blockchain. And in fact, this is the only one asset on the earth, in my opinion, right now, which gives you the access for such kind of data with such a precision and transparency. So that data would actually help to understand how the price could evolve and why and when and so on and so forth. So there's a whole bunch of new data sets which I would like to show you today, and those are people who are doing like most of the work research about this. David Puel, he published a lot of the stuff, and also he works in a collaboration with Willy Woo, you probably know him, and of course Murad Mahmudov, and well, many other people actually are working with them, or at least help them to develop those things. So first I would like to show the update on the NVT signal, and if you actually don't know what is that, you can watch one of my previous videos about the NVT MVRV as well. So but anyway, NVT is network value divided by daily transaction value, and network value is just the capitalization of the Bitcoin. And another version of that is NVTS, or NVT signal, which is network value divided by 90 days moving average of the daily transaction value. So Willy Woo on his website, he shows this data, and there is a lot of things behind it which we actually discussed before. But today we actually can find some update on that. And first, David Puel published the data on velocity, which is inverse NVT ratio. And the major take from that is, of course, we can spot the bottom but by these spikes here. And the second thing is that we may have the accumulation phase after that, which still will be quite bumpy, you see here. And finally, we can even detect some divergences from the price. You see this velocity is going up, but while the price is going down. And finally, there are like cycles of development of the price based on this velocity factor as well. And another thing which is sort of similar to that is NVT signal itself. So you can find the new data from Coinmetrics, which is used to calculate this signal. And it's really representative. So you can see that at the point of the bottom of the price in 2015, for example, we had this low, and then we had higher lows on the way of this trend, and pretty much the same we have here. Also, we have lower highs from the prices going from the top to the bottom in 2014-15, so 1, 2, 3 highs, and we had 1, 2, 3, well, not 3 yet, but 1, 2 highs in 2018 and 19th. So in 19th we probably will have this number 3 soon, but it very well may happen that after forming some high like this number 3, we can go lower than this trend, which would be after the drop of the price, when we see maybe like one more $1,000 rise of the price to something like $6,000 level or something like that, maybe even higher. And then from that point we may very well could see the drop and then correction of like 20, 30, even 40%. So be careful about that, guys. Another thing is the delta cap. So here on this plot, again, if you're not familiar with that, we have three major things in addition to the price, which is blue. So realized cap, which is orange here. The dashed line is average cap, and the brown line is delta cap. So realized cap is the value of all coins in circulation at the price when they last moved. In other words, it's the value paid for all coins circulation. Average cap is sort of quote-unquote forever moving average of market cap. It's cumulative sum of daily market cap values divided by the age of the market in days. So pretty much forever moving average indeed. And delta is just realized cap minus average cap. So what we can see here is, first, of course, as we discussed before already, when the price drops below the realized cap, then some people who bought Bitcoin higher than this realized cap, they are having the losses. And basically it means that there's not so many sellers anymore in the market. We saw it here, we saw it here, we saw it here again. And also the delta between the price and realized cap during the bear market and the bottoms and accumulation phase, it's getting lower and lower. So in principle we may expect that the point when we had in December is pretty much the same as the point when we had in January 2015, pointing out to the bottom of the current bear cycle. But then after that, when the price is moving above the realized cap, first it is the transition to the bull market, which is good, but second is after we are doing that, the more and more sellers appear, so price may start to correct, and those correction will be quite significant. The same thing may appear right here when we have the price going above the realized cap, so we actually starting to getting lower already, but just a very little bit, maybe it's just a small temporal decrease and we can go even higher. But technically at some point we may have a very strong correction from the new high right here. And another thing is that when we are talking about the delta, the price was intersecting delta once in 2011, it was intersecting delta once in 2015 during the bottom, and we actually touched it once again in 2018 December. So in principle we may expect that again, yeah, that was the bottom and we at least shouldn't go below this level. So as soon as the price will go something close to $3,200, it's more or less safe entry for the long position. But again, be careful with this intersection because the new correction is very possible because of the new sellers appear in the market. And finally, very interesting indicator which is called the Puell multiple, and the Puell multiple is basically daily issuance value in dollars divided by 365 days moving average of daily issuance value. It's pretty new, but you already can use it in TradingView, so you can type in indicators BTC Puell multiple and you can find this chart which has two levels like this oversold and overbought red and green, and indeed it spots the all-time highs and the bottoms of the bear markets with a very high precision. So you can see that despite of course the price was very different, but it enters actually the same green level in 2015 and in 2018 at the lowest points of the price. And although again we may have this growth with some correction which will correspond the drop in the price as well, so here we had the drop, we didn't have a correction yet, so maybe the drop of the price will still to come, and despite that we can at least say that we were already in this green zone, so the chances that we are about to return to this zone because of the price will be even lower than before is really small, at least in my opinion. As usual guys, everything which I say is my personal opinion, not a financial advice. But for defining the long-term bottoms, long-term tops, I think it's absolutely amazing indicator, so go ahead and use it and retweet the tweet from David Puell, so he made amazing work. Also there is an article on Medium about this Puell multiple, so you can find a lot of the analysis about it and explanation, but generally it's already like you can find some trends, like this was shorter than the recent one and the slope was also different, so like the market is getting slower and so on, but great indication of the bottoms again even in 2011, so again 15th and this year, as well as tops. And you can even see the similarity in the pattern after the drop, so you can have the rise and then correction, rise, correction, and then we had one more rise over here, so we have this line sort of resistance above which the indicator value actually went, and then we had the correction. So we didn't go above that yet, but we very well could go, and then this correction would be associated with the price going lower. So concluding guys, Bitcoin provides a lot of new data which could be used for trading and for evaluating the market cycles like bottoms, tops, where we are going, even on the short-term time scale. And I hope that it was useful. That is it for today. Thank you for watching.